if you look at e-money or if you look at the stablecoin model, stablecoins allocate liquidity, are not able to create liquidity. They allocate liquidity because it's a one-to-one model. You have high quality liquid assets. If you want to issue stablecoins of $100, you need to have $100 of high quality liquid assets.
Good morning, everybody, and welcome to today's episode of Couchonomics with Arjun in collaboration with GFTN Forum. We're beaming in from Tokyo, from this beautiful site with a shrine right behind me. Joining me, not on the couch, but on a chair, is the co-head of Kinexys, which was formerly known as Onyx. His name is Naveen Mallela. I've been trying to get hold of him for the last year, so finally I had to pin him down. And he's come extremely well dressed. So, Naveen, welcome to, I guess, the chair.
Thanks, Arjun. Thanks for having me. A very good morning to you. We finally get to do this. I think we've been trying to get this done for over a year now. Yep. So glad to be here on your show.
No, it's great. So, Naveen, let me dive right in, right? Because we're so tight on time. I think for the listeners, it'd be very, very interesting to understand what is Connexus. Yeah. Right? What is it that you're solving? What problems are you resolving? What are your products and offering in the market?
As I'd like to say, right, for us, Kinexys, which was earlier Onyx, was a bit of a contrarian thing to do within JP Morgan. For us within JP Morgan, just in general, like just most other commercial institutions, right? Like we'd like to be economics driven, we'd like to be business case driven. But way back in 2015, when we started off with our Blockchain Center of Excellence, we started off very differently with the conviction of wanting to dominate all aspects of the blockchain stack, if you will, right from the platform to the applications to the assets and the money side of things. So that's where really the genesis of Kinexys and Onyx was. And if I were to encapsulate it in one phrase, it's about like fundamentally reimagining how information, money, and assets move, and how we can rewire the core of financial market infrastructure.
No, so I get that, right, and you guys have a wide offering, right? So even if you take just cross-border payments and your tokenization platform and so on and so forth. Here's a question that I'm sorry, but I have to ask, right? You do come out of one of the largest, most respected sort of banks in the world. That's JP Morgan, right? But the entire legacy banking play is based on infrastructure, which is fee-based, right? Yeah. Is the industry really open and welcoming this level of disruption?
So you can argue about the timing of some of these things, but the direction of travel, our belief is incontrovertible, right? Like, we believe that the direction of travel in terms of the world moving towards shared ledgers, shared multi-asset programmable ledgers is unquestionable. So it is from this belief that we move forward. Now, in a world where you move away from bank-specific infrastructure into shared infrastructure, how do you compete? How do you differentiate yourself? How do you monetize? There are more questions than answers, but we want to be one of the first institutions to figure it out.
Okay. Let's get a bit more deeper into the conversation. So I'll use this umbrella term digital assets, and I'm sorry, there's so many definitions out there that even I remain half the time confused. Would you just break it down for us in terms of what all do you have? Because I was obviously reading up on Kinexys. I was fortunate enough to have one of your colleagues during Singapore FinTech Festival. We talked about digital payments. Yeah. We talked about digital asset. Then there's something called Link with the double I. Yeah. And then there's a lab side. Yeah. Right. Let's take a bit of a dive into the payments side. You're solving for cross-border payments.
Cross-border payments is one of it, Arjun. As I said, we'd like to span across boundaries, product boundaries, and we don't look at things very specifically on payments. I'll give you an example, right? I'd like to say that we keep talking all the time about real-time, instant cross-border payments. You can't solve instant cross-border payments without solving for some of the information friction which exists. Payments, when they go through, they go through fast. But when they don't, that is where the friction is. And why do they not? Why does the friction exist? That is simply because of lack of information or incorrect information. So pre-validation capabilities, the ability to pre-validate a payment, is critical in terms of ensuring the certainty of payment.
Mhm.
So that's where the link product comes in. Instant payments requires instant liquidity. I mean, you can keep building all of the infrastructure you want, but you speak to any major treasurer in any bank or in a corporate, they will tell you that instant payment is not necessarily about the rails. It's about having access to liquidity at the right time,
Agree.
in the right place.
Mm.
And that is where we are looking to solve through some of our digital asset initiatives in terms of, can you do an FX swap, which is just in time? Can you do an intraday repo just in time to source capital, to source liquidity, to execute a payment? So we're bringing all of these different things together, the information aspect of it, the asset aspects of it, to solve for payments as being one of the use cases.
Okay. And if I may just extend that further, and again, this will just further reveal my inadequacies in my
Happy to educate you, Arjun.
my lack of education is we hear stable coins,
Yeah.
we hear CBDCs,
Yeah.
right? There seems like a reasonable amount of momentum behind both,
Yeah.
right? How does I guess your solution, Kinexys solution, sort of coexist with stable coins, CBDCs? Is the future a basket of different products, and so therefore there is a place for everything? Or do you think at the end of the day, these are all going to become competing choices for corporates and banks?
There definitely, I have like very uh, opinionated views on this one. I think the future is going to be a mix of all of that.
Mhm.
If you look at money today, money comes in various forms. You have central bank money in terms of reserves, in terms of cash in hand. You have commercial bank money in terms of deposits, and you have e-money, right? Like M0, M1, M2. If you look at the money supply in general, but the bulk of the money supply is commercial bank money,
Mhm.
and there's a reason for that. The reason for that is fractional banking, the ability to create credit in the system. If you look at e-money, or if you look at the stablecoin model, stablecoins allocate liquidity. They are not able to create liquidity.
Great.
They allocate liquidity because it's a one-to-one model. You have high quality liquid assets. If you want to issue stable coins of $100, you need to have $100 of high quality liquid assets. Issuing $100 of deposit doesn't require $100 of high quality liquid assets. What you need is $10 of high quality liquid assets. And to ensure that banks manage their liquidity adequately and reserves adequately, you have all sorts of prudential supervision, you have stress tests. So that's the history of banking. Going into the world of digital currencies, that's not going to dramatically change.
Mhm.
We don't think stablecoins will come anywhere close to supplanting commercial bank money.
Mhm.
Stable coins is like 250 billion.
Mhm.
Yesterday, I was in a panel discussion where an example was being given that stable coins, the total transacted value in stable coins last year was 15 trillion. That's a very impressive number. JP Morgan every single day clears 12 trillion. Every single day, one institution.
Mhm.
So I'd like to just like throw that out there in terms of like
The scale.
putting it in context. So stable coins have done a phenomenal job. Crypto has done a phenomenal job in terms of innovating and showing us financial institutions the possibilities. And we are innovating on that front. And that is where we are firm believers in tokenized deposits. We are firm believers in deposits being the cornerstone product when it comes to digital currencies. Central banks as a risk-free settlement asset will always have a place.
Mhm.
Just like today, in terms of interbank settlements and offering the truly risk-free settlement, CBDCs will continue to be that. But my belief is that it will be more wholesale driven.
Okay. All right. We're in Japan. So let's talk a little bit about Kinexys and where all do you exist. We briefly touched base this 2 minutes ago before we started around
Mhm.
you being operating in other parts of the world. So where all is Kinexys today present? Um, where are you live?
One of the things with working with JP Morgan is like, you get global scale, you get global footprint.
Mhm.
And from Connexus standpoint, our client footprint is pretty much across the world over.
Right.
So we have a very large footprint out of the US, Europe, UK. We do a lot of work with China headquartered fintechs. And most recently, we are quite excited about some of the prospects that we are having here in Japan with the mega banks as well as with the Japanese corporates. What we're most excited here in Japan is the willingness and the openness to look at Industry 4.0. I mean, the ability um, for for innovating on business models using some of the more emerging capabilities, the ability to sort of look at models where instead of capex based models you have opex based models. You innovate around pay per use kind of models, and all of that requires you to have more scalable and infrastructure which can operate very differently from how it operates today. If you want to, for example, like automobile, right? Like if you believe in a world of autonomous vehicles, if you believe in a world of shared mobility, as an example, who's going to finance that shared automobile? And how would you create infrastructure where you can pay per use for in that sort of a world? So, or machine to machine payments, as humanoids and AI agents become more prevalent, how do you enable commerce between some of these autonomous beings?
Okay.
So that is an area where Japan's looking at deeply, and we are quite excited about seeing how Connexus can be a part of it.
Okay. Now, global footprint comes with a multi-jurisdiction presence. Most regulators are somewhere in their curve as far as digital assets or digital currencies, whichever way you would want to look at it. What's been your experience in terms of regulation? And I'm just going to put you on the spot. How easy is it? I guess the answer is not very easy, right? But what do you think could act as a catalyst to drive greater adoption coming from a regulatory government perspective?
I mean, for all our contrarian bets in terms of moving forward in digital assets and blockchain, we are an extremely conservative organization. And as our chief risk officer likes to always remind us, you cannot be in the place where you have growth first and controls come later.
Fair enough.
We have to take a controls first approach, which we fully understand. So our approach towards innovation has always been, and we pride ourselves in being champions of responsible innovation. So when we launched JPM Coin, what we did was not to dream up a novel product definition. What we did was we took an existing deposit product, put it on a distributed ledger rail, put it on a new kind of subledger, but we didn't materially change the product definition. What it allowed us to do was, rather than get caught up in terms of making the new product understood, we focused on the changing risk profile that this technology introduced. And largely it was about the changing risk profile around operational risk. And then we worked with the regulators around the fact that what's the residual and incremental operational risk which is brought about by this new capabilities, and how do you mitigate that? So we've been very deliberate about keeping the existing product definition, keeping the existing controls, the payment controls, whether that is AML, CFT, all of those controls stay as is. But what we innovate on is introducing new multi-asset programmable ledgers into the bank. So we've taken a very deliberate approach. Start with that, a single bank. Ultimately, our goal is not to be single bank. It's a shared ledger, is a universal ledger, right? Like so. And then we've said, okay, this is great, but this is a single bank solution. You need to get multiple banks. You need to move the industry forward. We set a part here. We set a part here with Standard Chartered Bank, DBS, Temasek. Now we have Deutsche Bank joining and ENBD joining and more players joining. That's the shared ledger. And now with greater permissibility, we hope to go to universal ledgers. We hope to go to public blockchains. So it's been a very step-based approach and learning as we move forward, but at the same point in time, commercializing, because ultimately we are intensely capitalistic, we're intensely commercial, and commercializing as we go along to show that there is good business in introducing these products.
No, and I think that's a very sensible and I guess a prudent approach, and I guess that comes out of experience in the fact that obviously JP Morgan itself is not innovating for the first time ever, but here's an experience I've had because I get to work when I wear my other hat with a number of regulators, right? I think a number of regulators I've experienced have struggled with the concept of are they regulating the product, as you mentioned, or the underlying technology on which the product actually sits, because some of these technologies are avant-garde in terms of that they're quite new, right? I'm assuming you've come across that.
We have come across that. You hit a great point, right? And some of the conversations with our regulators has been, very encouraging, right? The conversations with some of our regulators was to exactly the same point. Are we regulating the activity or are we regulating the tech? And they've taken a very forward-looking approach. For example, it's a deposit product. If we take an example of JPM Coin, do I need to worry about whether it is sitting in AWS or whether it is sitting on Azure or what sort of core banking system are we using? If I'm not worried about that today, why do I need to worry about whether it is sitting on distributed ledgers or not? Mm-hmm. Of course, you need to have an understanding about what novel risks are introduced because of the
underlying tech.
Of the underlying tech. But the focus is on if it looks like a deposit, if it acts like a deposit,
it is a deposit.
It is a deposit.
No, I think you make the fair. And so we've had that debate, to be honest with you. We've had that debate saying you cannot, as a regulator in financial services, be underlying a technology which is going to be applied well beyond financial services.
Yeah.
But I guess the pushback usually comes back by saying, but the technology introduces risks which are unknown or introduces risks which currently we don't have a viewpoint on. And so therefore we get an issue. Furthermore, I guess, data residency is becoming a bigger challenge, as you can see. I think there is globalization, but at the same time, there's this sort of concept of domicility of data and so on and so forth, which introduces challenge. But I'm pressed on time, so I'm going to, there are two very interesting things which came up was, one, JP Morgan is a traditional financial services player. It's massive, right? I'm sure there's pockets of innovation, right? You need to be fleet-footed. Yeah, I'm sure the chief risk officer has a great view. How are you guys coexisting in an environment, right, which is quite, if I may say, organized, right?
Yeah.
The engine works, right? So how have you guys found a way to kind of operate within itself? Maybe it's just because you guys are all very smart and you know how to work it. But what has the bank had to do to let you sort of flourish, if I may say?
In many ways, the setup of Connexus has been critical for that.
Okay.
Having a dedicated unit, and we are about, give or take, 250 people strong, across tech, across product. Having a unit, 250 people thinking day in and day out about moving the needle on digital assets and making it real and making it commercial helps. It's not somebody's... it's not somebody's part-time job. It's not somebody who's moonlighting apart from the day job to do something of the sort. The fact that there is a separate unit with a clear mandate to go make this happen and holding us accountable, even though I said, we are fortunate that we have patient capital, we are not business case driven. We are accountable ultimately to show results, right? It is a significant spend on part of the
250 people salary.
250 people, right? We are JP Morgan, but it's a considerable team.
Yeah.
So that really helps.
Okay.
I think what many other organizations have tried to do was try to do it as part of their regular business. And it's very difficult to make progress because you take a business case first approach. And when you're trying to do something which is a Horizon 3 innovation, a frontier innovation, a more disruptive innovation, taking a business case first approach means that you are waiting for somebody to lead the way. For us, we've been fortunate enough not to have to take that approach.
Okay, interesting. Final but one question. You mentioned collaborations with other banks, right? You said it's a shared ledger. Two parts to it. So one, give us an example where, a collaboration has worked and, something solid has come up with it. And is collaboration a very sort of, if I may say, a pincer move towards kind of discouraging others to build similar platforms by saying, come on to this and, we all sort of grow together?
if you look at the history of financial market infrastructure, if you think about Visa, MasterCard, Swift, and I'm going back before my time, but if you
Even before my time.
okay, just to be clear, right? I mean, if you look at history, right, all of this market infrastructure, which is fundamental and critical today, have born out of efforts by a small group of big players coming together to
Yeah.
move the industry forward.
Hmm.
We don't think this is going to be any different.
Okay.
So with Partier, the work that we've done with DBS and Standard Chartered Bank, and now with Deutsche Bank and ENB, Emirates Bank coming and joining us, means that we have a core group of players to move this forward.
Mm-hmm.
So it's an example of a collaboration which has worked. Partier is now a separate entity. It is transacting, and it is only going to scale from here on. That followed by things like Project Agora, which BIS is driving with 7 central banks, with 43 commercial banks, means that this public-private partnership will serve as further impetus to some of these more nascent efforts. So I see this as the way going forward. So it's not novel for private sector to innovate. It's happened before, and this time is going to be no different.
All right. Last question. What happens over the next 4 to 5 years? What's the big plan?
I do think that shared multi-asset ledgers is going to become real. I do think that messaging-based infrastructure, what we have today, is going to slowly give way to this shared ledger infrastructure. I do think that stable coins, tokenized deposits, wholesale CBDCs that we've been talking about will become real, will become mainstream. And I mean, we are no longer debating about when is this thing going to scale. I see that's the vision 3 to 5 years from now.
And what's Connexus' role going to be in all of this?
We would look back and, success for us really is Connexus becoming a mainstream business within JP Morgan. We do think that it will not take 5 years. We do think that we are well on our way to getting there. But yeah, I mean, this being a mainstream revenue generating business for JP Morgan is how we see Connexus.
Excellent. Naveen, I want to thank you for making time. I know you need to get on a call in less than 3 minutes. So with that, I'd like to say thank you, and hope to see you in person, maybe in the Middle East. You mentioned you're in the region. I as I said, I live in an aircraft, but I'm usually in Dubai. So next time if you're there, please do give us a shout. I would love to hear what you guys are doing in that part of the world too.
Thanks, Arjun. Thanks for having me.
Thanks, right. So, ladies and gentlemen, that was Naveen Mallela, who's co-head of Kinexys, which is part of JP Morgan. He joined me today from, I don't know where he's flown in from, but he's joined me in Tokyo. With that, I'll say goodbye till the next episode.